Hello, everyone. Welcome to the market update for Tuesday, May the 31st. Again, as always, if you have any questions during the week or any that I don't get to in the live class here, make sure you send those to jerry@traderspro.com. Being the last trading day of the month, we don't want to overanalyze what's taking place today because sometimes there can be some rebalancing that's going on that has nothing to do with what the future expectations are for the market, but are basic fund managing housework that they have to do. So we don't want to look too much into what happens on the final trading day of any month, and particularly end of quarter, which this is not the end of the quarter. Next month will be the end of the quarter. And there's a lot that goes on those final days of the month. So, but it is interesting that we're seeing a little bit of after the rally we had late last week, we're seeing a little bit of kind of exhaustion in the buying today. We'll see how that plays out for the rest of the week. We'll have a better idea on Thursday. Having the end of the month today, early in the month on Thursday, to be able to kind of see where things are going. I still think this is just a rally within the downtrend, and I'll be kind of looking, to see if there's any follow through to today's price action that would indicate that we might be rolling over and having another move down. Now, maybe the opposite could happen. We just keep running like we did in March, but ultimately, I think we're still heading lower. As I keep saying over and over, we haven't had that panic sell-off yet that is so typical of market bottoms. And by the way, because so many people are kind of expecting that panic sell-off, there's a couple of ways it could play out. One is that you could not have a panic sell-off. That would kind of surprise everybody, particularly those that have been around a while and have seen these bottoms take place. And what would happen in that case is you'd be rallying, and eventually people would realize that, they're waiting around for this panic sell-off that may not happen, and they're missing out on the rally that's taking place, and they'd have to jump in at some time and participate in what's going on. That's always a possibility. But I think what's more likely is that you'll get a panic sell-off. Everyone's waiting for one, so you'll get one. Everyone will think, okay, this is the bottom. This is what we've been waiting for. They'll jump back in a little bit more aggressively than maybe they normally would, and then we'll get another one, or maybe even two more that really bring things down lower. And usually when these panic sell-offs end, like I said, the feeling is usually how much further are we going to go. It's not focusing on how much we've already dropped and this can't go down any further. It's, wow, I didn't think we could go down any further. When is this going to end? How much further are we going to drop? And I think that's what's much more likely to take place. Like I said, particularly because so many people are looking for that sell-off. You can't have a panic sell-off and then everyone be confident that that's the bottom and jump in. That just won't be the bottom. That's just not how it usually works. So now, again, this could play out over several months. And so I'm not suggesting that, we get a panic sell-off and then, another one, and then it'll all be done. What we could do is see a rally off of a panic sell-off where buyers feel like it is the bottom, and then it rolls over and drops again, and something like that taking place. But that's down the road. If we see it taking place, I'll comment it in the classes, and we can see how it plays out. Like I said, our job is not to try to predict what's going to happen next. It's to recognize what's actually going on and then trade accordingly. So we look out at how it might play out just to be prepared, but we're going to react, or we're going to actually trade based on what actually is taking place. Now, quickly here, going over the direction alerts, we're getting further over to the left side of the bear market indicator. I told you that we'd probably get to that far left side before we bottomed. and that's definitely looking to be the case because, like I said, if we get any sort of panic sell-off, it's going to push it right here. It's going to stay there. It's not going to go down any further, kind of like when it stayed over here. And we could see something similar to what happened over here, where this bull market was unusual in how strong it was. That we could kind of see the opposite here, where we stick right on this -5 and just the market keeps selling off, but it's stuck right here. It can't go down any further because it could be a little bit more of an unusual sell-off that takes place at that point. So we'll see how that plays off. These are longer-term indicators here. The shorter-term indicators were right in the middle, so momentum not really showing any sort of extreme. We could go either way. What that means is we can either continue to rally or we're off the oversold area, so we're in a position here where the market could roll over and drop as well. And so we'll have to kind of focus on the candles and the price action, the individual price action, to see what's more likely to take place as far as that's concerned. Breadth indicators right in the middle as well. Sentiment is still relatively high. Not much has changed with that indicator for the last several updates. Buy-sell ratios. This is what I talked about last week, that as the market rallied, we'd like to see, at first you'll see a majority of stocks going from sell to hold as opposed from hold to buy. We're seeing that right here. You can see the sells have come way down. Buys haven't come up very much. But that sold environment that we were in, when we had these extremes, has now been alleviated. And again, either we could see a continued rally and you could see a lot of stocks moving from hold to buy, or we're in a position where we could roll over again and we could see those stocks go back from hold back to sell. And then, excuse me. I'm out in Chicago this weekend. There's something in the air that's really aggravating my allergies, so I'm going to have to take a few drink breaks here during the update. All right, so as far as the sentiment indicator, we're right in the middle, not showing any sort of extreme there. Now let's get to the individual charts. And this is what I'm talking about as far as showing a little bit of buyer exhaustion. Now, a couple things to point out here. Again, I've been looking at this as a possible bearish ABC pattern right here, setting up for another move lower. One thing I talked about in length on Thursday was this support resistance zone right into here. We stopped right at it on Friday. And then today, although we traded lower, here's where we opened. So we opened down at the open. We sold off early in the trading day. We pushed higher now. But look where we're stuck. We're stuck right at that resistance area. Market's having trouble breaking above that. Now, it could just be a temporary thing. It's just pausing. Maybe it is a little bit of that end of the month. Nobody wants to, coming out of a holiday as well, nobody wants to do anything, or people are coming back from vacation. So it could just be a pause for a breakout move higher. I told you last Thursday that if we do significantly break out above this area, that would be more bullish for the market. We'd have to start to recognize the fact that maybe we could rally up further at that point. Maybe start adding some new positions into the portfolio and to try to take advantage of that. If we get a bearish reversal, so if tomorrow we start selling off in this area, especially if we have a bigger sell-off, that would be significant. That could mean that this is a bearish ADC pattern, and we're likely to come back down again and possibly come back down pretty strongly. So that's something to look for this week. Obviously, we would expect by the end of the week, this week, to have a little bit of clarification as to which direction we are going to move in. And so I think this becomes a very important week, even though it is a shorter week this week. We'll see what happens. By the way, if I keep referring to today as Monday, it happens every holiday week. I always assume the first trading day is a Monday, but just recognize that I am talking about it is Tuesday, and I do mean Tuesday, even if I say Monday. It's just the habit of the normal trading week. All right, so now when I say exhaustion, though, again, when you attempt to sell off and you say, well, buyers push things back up, they push it back up to the highs of the day today. Isn't that bullish? Isn't that showing strength? Well, I mean, it can depend. If it can really push things higher, especially above this resistance area, then yeah, maybe it could show some strength. But if it fails to, if it ends the day right here, then that's what it's kind of telling you is, yeah, the buyers came back in, but there's not enough of them to push it higher, which means you're probably looking at the final buyers coming in. You've had these 3 or 4 days where we've rallied. Obviously, new buyers who are coming in during this period of time. But now, and they were able to close it higher each of those days. They were able to close the market much higher. Here, that they're barely able to close it higher, or even if it fades into the close off of that, then again, that's showing that buyer exhaustion. Now, again, buyer exhaustion doesn't necessarily mean that the market has to go down. Buyers could become reinvigorated and especially starting a new month, and they could come right back in tomorrow and break out above there. But definitely, if it reverses tomorrow and starts selling off, and then that would be something that would be significant. And if we do fade into the close, and we do end up closing lower than where we opened, it would be actually a bearish inside day, which actually the Russell 2000 is showing that, I believe, right now. Let's take a look. Skip ahead to that real quick. Yeah, so you see, so if we do, again, this is assuming we sell off into the close. If we end up closing lower than where we opened today, but inside of that trading range from Friday, then this is a bearish, what we call bearish inside day. It's not the strongest bearish reversal, but given where it's taking place at a major resistance area. That would add a lot of significance to it. And you'd likely expect that the market would pull back right there, sell off a little bit right there. And the small caps right now are showing that. We tend to look at the small caps as a leading indicator of the market. So if we're seeing just buyer exhaustion on the S&P, buyer exhaustion on the NASDAQ and the Dow, but we're seeing an actual bearish inside day on the Russell 2000, that could be that early indication that things aren't so great under the surface, and that we could be ready to start another move down. The Russell 2000 is also a more distinct bearish ABC pattern. And remember when I was showing this to you potentially last week of potentially how it could play out. Again, I kept stopping in this area for a couple reasons. One, that there's significant resistance in that spot, but also remember that in an ABC pattern, wave C tends to be about the same length as wave A. And although in this case it's a little bit longer than wave A as it pushed into that resistance area, but still the context is there that where we could assume that this could be done and it could roll over and drop. Now, remember, we still have some more time in the trading day. Could the Russell continue to rally and have not an bearish inside day, but a kind of a bullish exhaustion day like the other indexes? Yeah, it's definitely possible. That's something to look at going into the close. And like I said, I doubt that we're going to get any strong indication today. And even if we did, again, I keep emphasizing it's the end of the month. You don't want to make any aggressive trades based off of the end of the month. That would be the same with option expiration Fridays, or the main option expiration Friday, the third Friday of the month. You don't want to draw too many, particularly volume conclusions on those days, because there's a lot of volume that takes place on those trading days. It has nothing to do with future expected movements, but it has a lot to do with exercising options and all that stuff that goes on an expiration Friday. So it doesn't mean that you can't do anything. It's just you don't want to in that situation, you don't want to draw a strong conclusion for your trade based off of volume. Oh, that's a huge increase in volume. We're always going to get huge volume on option expiration Fridays, so it's not as significant as it may seem. So you don't want to draw that big of a conclusion. And same at the end of the month. Like I said, there's all this rebalancing going on with these big fund managers. Again, usually bigger at the end of a quarter, but a lot of it does happen at the end of the month as well. And so we don't want to draw too big of a conclusion to that. All right, so real quickly here, we'll look at the Qs as well. All of these are bumping right up against that resistance area. Actually, this is a little bit below it. And it's trading higher today, but again, when you have the tail, this looks kind of like a hammer formation, right? This is why just the candle formation is important as the context, because if that is happening at the end of a move down here at the bottom, that's very bullish. When it's happening at a top, though, it's opposite. It's bearish. It's showing a little bit of that buyer exhaustion. So when you start to see those what look like hammer formations, but they're after a big run up. Again, they're not the strongest reversal. Okay, I need to continue to emphasize that. I'm not saying you go short off of that, but you could look to be ready to go short if you see that. If you are going to trade short, that could be an early indication that the rally could be fading. All right, moving on to the other indexes, bonds. Again, I told you that although we were moving higher and we had broken to a higher high right here, barely, the price action was more choppy, more sideways. The previous trend was down. That usually means that the next move should continue in that direction. It was moving in before it moved sideways. We're starting to see that today, I think, with the gap down in bonds. We should see it continue to move lower. Now we'll check that on Thursday, see if anything changes there, but it's looking like it's starting to move back down again and continue that downtrend it's already been in. And we'll assume that that's going to take place until we see anything otherwise that would cause us to change our outlook on that. Gold, again, all over the place, hard to read a little bit. You could possibly look at this as a larger bullish ABC pattern correcting this move up, although it's a very deep correction if that's the case. You did have a recent move up right here. Maybe this is a smaller bullish ABC pattern. The bottom line with this move up and this kind of corrective move right here, I would assume that gold should rally for a little bit in the upcoming week. Now, it could just be that this is a bearish ABC pattern, wave A, wave B, wave C, and that wave C is just that final rally before it rolls over and drops. But even then, it still could rally a little bit if that's the case. I don't know if the correction is done yet, though. We have a bearish candle today, and it's near the lows of the day, so you could have another move down first before having that little rally. And you don't always have to have it, so it's always possible, and especially with the way gold has been moving so radically lately. I wouldn't have a lot of confidence drawing any conclusion on its direction. But that's just what I'm seeing looking at the chart right now. We'll see if it plays out in any one of those scenarios that I just outlined there. Oil broke out of the range, although today is a bearish reversal candle. So we'll see if it starts to correct a little bit right here. Here's the breakout of the triangle. We opened higher, opened very strong today, but we're trading lower than where we opened, although still higher than Friday. And so it's showing a gain right here. It's showing almost a 2% gain, but that's misleading. If you don't know how to read the price action, you would think that that's fine, everything's good, oil's having a great day, maybe I should buy oil stocks. But that's not what the price action is showing you. It's showing a bearish reversal candle. Typically, you'll see a pullback of some sort. Again, these are very short-term indications, so it could just be that oil pulls back for a day or two. I'm not suggesting that oil is going to go into a big downtrend. Maybe all it's going to do is just retest the breakout right here. Maybe we have another down day in oil, and then it stabilizes right here and continues to move up. I'm not getting out of any of the oil stocks I'm in until I see more than just a one-day reversal. If it looks like it's going to be something bigger than that, then we can make some adjustments. But I don't see anything right now to get me to get out of those stocks. All right, so next one, the dollar. Dollar continues to trend down. I told you that it could start to move a little bit sideways to correct a little bit, which it looks like it's been doing the last few days. We did go to a lower low right here, so with the impulsive move down off the top, more of a sideways move over the last week. Once this sideways move is done, we should see another move down in the dollar. At least that's what the basic trend, would that's the basic trend behavior would indicate that that's how it should move once that sideways move is done. Now it could, with these corrections, you could have a little bit of a short-term rally, and maybe it could get up a little bit higher here in a few days, but still ultimately roll over and drop. So the day-to-day, for trying to predict the day-to-day movement can be difficult to know exactly how that's going to play out. But overall, bottom line is once this kind of sideways correction is done, we should see it continue to move lower. And that's what I'll be looking at, unless I see something different. It starts to really have an impulsive move up, then, it could be an indication that we're reversing back into an uptrend again. The VIX is showing actually opposite of what the S&P is showing. S&P is showing kind of that buyer exhaustion. The VIX is showing seller exhaustion. So, you had the down candle here on Friday with the market moving high. Remember, VIX and the S&P should move in the opposite direction. And the S&P is up for the day so far, and the VIX is down. So that's showing kind of the same thing. But look where it opened. It opened higher as the market gapped down at the open. It traded a little bit higher here when the market sold off early. Now that the market's come back, it's managed to go lower here. But again, that price action is showing selling exhaustion. Again, not a strong indicator, not suggesting that it has to reverse and go up. And by the way, again, if the VIX is going up, it means the market's going down usually. But I think the fact that we're seeing the same pattern there on both charts it just tells us that the VIX is telling me the same thing as the S&P. And again, usually it's when it's not, and it's showing something different that we want to pay attention. So in other words, the VIX really isn't telling us anything we don't already know today, which it happens a lot. So you hear me say that all the time. You want to assume the VIX is telling you something significant every day, because it usually isn't. If it is, if you think it is, you're probably overanalyzing it or not using it properly. All right, and then chip stocks, again, you can see a little bit clearer form of the buyer exhaustion. Barely moving higher today after the sell-off early. Again, possibility this is a bearish ABC pattern. There's a lot of resistance in this area where we're at right now. We'll see if that holds. And again, we'll see if it breaks it. Again, that'll be something for Thursday that'll be important to see what happens over the next couple of days. Dow Transports, same thing. You can see that buyer exhaustion. There's a little bit of support up and resistance up a little bit higher. It doesn't have to get there though, but you do want to know where it's at or pay attention to it. And then Bitcoin's up a little bit today, although it still just kind of looks like, this is kind of that correction within the downtrend, sideways move. Previous move was down. Remember, I told you when you get these real sideways, real compact sideways moves, it tends to do it more on the uptrends. You have an uptrend, you have a real compact sideways move. Again, what that's showing you is it's showing you indecision. It's showing you the buyers aren't confident to push it up. Sellers aren't confident to push it down. So it's stuck in that range. And sometimes what has to happen is you have to break the range. Now, with the trend being up before that in a bullish trend, a lot of times what will happen is you'll dip below that sideways range. That will bring the price down to where those buyers, again, those buyers are waiting for a bigger sale. They're waiting for that that blue light special, for all you people old enough to remember the old Kmart days. They're waiting for it to go on sale, and now they're aggressive buyers, and that's what ends up pushing the trend higher at that point. Well, you can see the opposite happen sometimes in downtrends, although, again, it's not as prevalent in downtrends. You've got the sellers pushing things down. You've had this sideways range where buyers and sellers have been fighting, or not really confident. They haven't been fighting. They just don't have a lot of confidence it's going to go up. Sellers don't have a lot of confidence it's going to go down. Sometimes you need to break out of that a little bit for those short sellers to say, okay, now I feel like I can short this again, and that sometimes can drive it lower. Although, again, what can sometimes make the downward version of this a little bit different is sometimes stocks do base. Sometimes they drop dramatically, and we know Bitcoin has dropped pretty dramatically. Sometimes they'll move sideways, but it's more of a base for starting a new move up. It creates that kind of a bowl-shaped move you hear me talk about all the time. One of my favorite patterns to trade, by the way. Although this really isn't a bowl-shaped move right now, it's kind of a down, flat. If it does start to move up, it's not really not the cleanest bowl-shaped move there, but that's a possibility, and we'll have to look at that. But bottom line is, I wouldn't get sucked into this move up today because it could just be what the short sellers were looking for to start shorting again, and could drive it right back down. By the way, I think it was Luna that went belly up, and then somebody injected more money into Luna to stabilize it again or something like that. Don't be buying Luna even if it looks like it's worth pennies right now. I mean, that's not a good sign when someone has to inject capital to prop up a whole trading instrument. It's not a stock or a company or something like that. This is a whole trading platform. That's not a good sign. It looks to me like throwing good money after bad, and is not likely to end well. So for all you dreaming of buying Luna at 2 cents and selling it at $500 or something, being an instant gazillionaire, maybe if you want to throw a few bucks at it, just put $20 on it and see how it turns out. That's not a outrageous. You could look at it as a form of entertainment, but if you're looking at a retirement plan, you want to put thousands of dollars at these levels, not a good idea. Yeah, and I always tell people you might as well just write that check out to some charity, so at least some good comes out of that money, because you're just giving it to the markets in many cases. All right, so that kind of completes the market update. Now, I did make an adjustment in the portfolio. Well, let's look at the portfolio trades here. Again, I'm still heavy in energy, defense, and what else did I have in there? Oh, agricultural, the ADM, and the fertilizer, CF fertilizer stock. But NOC, again, this one looked like it's getting ready to break out. It's right at the breakout area. It ran right up to it last week, and it's just kind of consolidated, which is actually really a good sign. You like to see that because then it can lead to breaking out. Kind of a little bit of a bullish reversal candle today. But, I don't see any reason to do anything else but just hold this thing right now. USO, again, bearish reversal candle today, but it's still up, so no reason to do anything with that one. CEIX is down a little bit today, and it's right at the breakout area. So there's some resistance up here, but still looks okay. I'm still holding that CF, this is the fertilizer company, nice update today. It's still kind of in this range, this corrective range. We'll see if it starts moving back towards the upper part of that range. Chevron, another oil stock, kind of the same thing, bearish reversal candle today, but it's still in its uptrend. And then Archer Daniel Midland, ADM, and again, this is an agricultural play. Again, I like the pullback here. It still has been, over the last few days, it's been pretty strong. We're doing pretty well on that one. No reason to do anything there. I did add the inverse ETF on SARK again, SARK. A lot of it was because of what we saw that buyer exhaustion in the indexes possibly pulling back this week. And you've got this kind of bullish looking ABC pattern on the inverse ETF. And remember, we also had that bearish inside day on the small caps. A lot of Kathy Wood's stocks that she has in this fund are small cap stocks. So it looks like the small caps could pull back a little bit. If that price action looks the same by the end of the day, there's still an hour and a half to go before the market closes. But to hedge a little bit in case we do start selling off. Remember, the chip stocks also look like they had kind of that buying exhaustion taking place. With the SARK, you've got a little bit of a bullish inside day right here. Again, bullish on this would be bearish. It means that the market's probably going down if this is going up. But it allows us to be long and make money if the market is going down. And so again, I'm looking at the possibility this is a bullish ABC pattern right here. We could start to move up. If that changes, then I can jump right back out of it again. If we start, and so if you're trying to decide, well, what would cause me to jump back out of it again? Well, we talked about that on the S&P. If we break out of this range we're in, there's a lot of resistance right here where the market is right now. And if we can, now by breakout, I mean, I want to close above this area, not just trade above it, but if it can close significantly above this, then maybe we do run for another week or two, keep rallying for another week or two. And I would want to get out of that SARK trade at that point. But if we do sell off tomorrow or sometime this week, I want to have that hedge there to where this will go up if my other stocks are going down, particularly oil that looks like it could pull back a little bit. Got a few energy stocks. This could help make up for that. So that's the purpose. Now, again, if I'm making money on SARK but losing money on the others, and we're just kind of breaking even, that's okay. Any money we can make when the market is still correcting is a bonus. The bottom line is we just want to make sure we've got a lot of capital, as much capital as we can, but when we do bottom, to be able to jump in and be aggressive. And that's when you make the big money, is when you don't get killed on the way down, and then you can get aggressive on the way back up. And I know we've been having to be patient. We have to wait a while. We're probably going to have to continue to wait for a little while, but that'll pay off. And it just makes no sense to jump into a downtrending market aggressively, hoping that it'll go up, and then getting wiped out, and then missing the bottom, and then spending the whole next bull market wishing you would have been patient to wait another few weeks or so. It's just a smart thing to do. So make sure and if we're late a little bit, if we don't pick the exact bottom, we're late a little bit, that's fine as well. It's bull markets tend to last a long time and give you plenty of opportunities to get in. And we'll be fine if we're late too. All right. So that's the portfolio. As far as, again, new trades to get into, I really wouldn't get into anything today with, like I just got done analyzing with you. It could go either way with the end of the month like this. If you are looking at an area though that I still think looks really good, that those defense stocks. I already have Northrop Grumman, NOC in the portfolio, but Lockheed Martin, LMT still looks pretty good, although it's down a little bit today. The overall pattern looks like it could continue to move higher. What was the one I was looking at? LHX, this one, level 3. Yeah, has this nice pullback right here. Looks like it's starting to move up. Again, a little bit of buyer exhaustion that's showing today. So, and you could wait for it to go to a buy signal if you want to wait for that extra confirmation. Not a bad idea too. With, like I said, end of the month. I just don't see a reason to really do anything today if you don't have to. But take a look at those if you need something for today. Hopefully by Thursday in the stock specific class we'll have more that we could be looking to get into. General Dynamics, same thing. Let me get the candles here. A little bit of buyer exhaustion today, it looks like, but I like those pullbacks. All right, that's all I have. So just keep an eye on those things I talked about today, and we'll see how things look on Thursday. So have a great week. We'll see you on Thursday for the stock specific class. Bye, everyone.